अरे Sebamed, Chapra. Let's say guys that as per the budget, all of you pay attention guys. As per the budget, beta, let's say that you were supposed to manufacture and sell 2000 units. You were supposed to work for 4000 hours. And the variable overheads that you were supposed to incur was 40,000 rupees. If I take standard rate on a hour basis, it is 40,000 divided by 4,000 labor hours. How much will that be, beta? 10 rupees per labor hour. If I take standard rate on a per unit basis, it will be 40,000 divided by 2000 units. That will be 20 rupees per unit. Alright kids. Let's say beta that the actual output is 1800 units. And for this 1800 units, the number of hours that you have worked for is 3800 hours. The total variable overheads that we have incurred is say 41,000 rupees. 41,800 rupees. Now, if I would want to compute what is the amount of absorbed variable overheads, what do you think will be the answer if it is based on number of units or if it is based on number of labor hours? What will be the amount of absorbed variable overheads if it is based on number of units or if it is based on number of hours? Based on number of units, 36,000. Based on number of hours, incorrect. Now, this is the most important point that we are supposed to learn under standard costing. Whether they use the word standard variable overheads or whether they use the word absorbed overheads, absorption is always on the basis of standard relations, not on the basis of actuals. So, in order to manufacture 1800 units, what should have been the standard hours for actual output? 3600 hours. Yes or no, guys? So, ये जो standard variable overheads है, are you all following? From where did I get 3600 hours, guys? Per unit, how many hours were you supposed to take? 2 hours per unit. That 2 hours per unit multiplied by 1800 units, standard hours for actual output, but are 3600 hours. So standard variable overheads will be, if it is based on labor hours, you will write 3600 labor hours multiplied by 10 rupees per labor hour and not 3800. It's always and always standard rate per hour multiplied by standard hours for actual output. You do not multiply by actual hours. If it is based on output, you will write 1800 units multiplied by 20 rupees per unit. Answer can never change because the standard relations do not change, actual relations change. असली में रिश्ते बदल जाते बेटा. Literal translation. The standard relations are supposed to remain constant. Alright. So here beta, the total standard variable overheads will be 36,000. Are we clear about this? Any doubt in this? So standard variable overheads can either be written as standard rate per hour into standard hours for actual output or standard rate per unit into actual output. I did not use this anywhere else, but then it is very common under overheads. They might not give us details of number of hours, but we will still be able to compute standard overheads by multiplying rate per unit with the actual output. दोनों same है, there is no difference. इसलिए पिछले chapter में when someone was using the word standard output, I stopped them there only. I said there's nothing called as into standard output. You cannot write SR per unit into standard output, guys. Standard overheads are not for standard output. Standard overheads or standard cost is always for actual output. You're always and always supposed to multiply standard rate per unit into actual output, or you will multiply standard rate per hour into standard hours per actual output. Are you all following this? So based on this, guys, your standard cost should be 36,000. Whereas the actual overheads that we have incurred is 41,800. Yes. We have a variance that is arising here, guys, and the variance is for an amount of 5,800 rupees. The total variance that we have is 5,800 adverse. 36,000 is the amount of standard variable overheads. Actual variable overheads are 41,800. Are we clear about this? Bharat, side में सरक जा बेटा. और सरक. दिख रहा है ना? तू लंबा है ना? So 36,000 minus 41,800, beta, the amount of expenditure variance will be 5,000. It is still a variable expenditure, guys. मेरे को सिर्फ एक ही point नया पढ़ाना था, that even if they use the word absorbed overheads, do not end up multiplying by actual hours. You will always have to multiply by standard hours only for actual output. You will never multiply by actual hours. Even now, generally नहीं होता बेटा, standard costing है. That was overheads chapter. Even overheads chapter, guys, if standard costing is applicable, absorbed overheads will be standard rate per hour into standard hours only. The whole point of following standard costing is to include expenses as per standards, not as per actuals. If you're buying a raw material, guys, at 10 rupees per kg, standard cost is 9 rupees. Standard cost में 9 rupees include करोगे, 10 rupees include करोगे, 9 rupees. As per standard, you're supposed to consume 2 kgs, actual consumption 2.2 kgs. Will you include 2 kgs cost or 2.2 kgs cost as per standards? 2 kgs only. The whole point of following standard costing is to absorb expenses on the basis of standards first. The difference between standards and actuals will be taken care by these variances. You do not absorb overheads based on actuals. The answer cannot change, guys. Are we clear about this? It doesn't matter what is your allocation basis, whether it is machine hours, whether it is labor hours, whether it is output. Absorbed overheads are going to remain constant. They are not going to change. Are we clear about this? So your overall variable overhead expenditure, guys, or cost variance will be equal to standard variable overheads for actual output, also known as absorbed variable overheads, minus the amount of actual variable overheads. Kuch naya nahi hai, guys. There's only one point, that I may calculate overheads on the basis of output. That is the only thing that you will have to learn. SR per unit into AO. Actual variable overheads are actuals only. It will be actual rate per hour into actual hours, or it will be actual rate per unit into actual output. Are we understanding this? Your overall variable overhead variance is still segregated into two heads, guys. One is, what are the two reasons for variable expenses? Efficiency, guys, and expenditure. Variable overhead efficiency variance आएगा, variable overhead expenditure variance. ना यहाँ पे नाम वही है. There are no other words. Variable overhead efficiency variance will be on account of efficiency of utilization of the expenditure. What do you understand by that? Let's say we are using grease as such, guys, for the machine. Efficiency of utilization मतलब efficiency expenditure, guys. Efficiency variance arises on account of efficiency of the labor. If the labor ends up working for more number of hours, you are not only incurring a higher amount of wages, you're also incurring a higher amount of variable overheads. You've been given time to finish the task in 1 hour, you take 10 hours to finish that. You are not only being paid for 10 hours, guys, you're also incurring variable overheads for 10 hours. So when you say variable overhead efficiency variance, it is not efficiency of the expenditure that we're talking about, it is efficiency of labor affecting your total variable overheads. So it will still be standard hours for actual output. These standard hours are standard labor hours only, minus actual hours, multiplied by not standard wage rate per hour, it is standard variable overhead rate per hour. It is still standard hours for actual output minus actual hours, guys, multiplied by standard variable overhead rate per hour. Are we understanding this? And the other variance, beta, will be expenditure variance, will be standard rate minus actual rate multiplied by actual hours. SR minus AR into AH. Standard rate is standard variable overhead rate. AR is actual variable overhead rate multiplied by actual labor hours. Any doubt in this part, guys? समझ में आया? एक ही नया चीज सीखे बेटा, बाकी पूरे formulas भी same है. And what is that? Absorbed overheads अगर word use किया, that is exactly the same as standard overheads. And standard overheads are not absorbed on the basis of actual hours. They are always absorbed on the basis of standard hours. Are we clear about this? What if there is idle time of the workers? Still we will have to incur overheads. Very good, guys. खाली बेटा है, variable overheads incur थोड़ी करोगे. You incur variable overheads only when there is some work being performed. There's no such thing called idle time variance when it comes to variable overheads. So the actual hours that we consider, guys, for both efficiency and expenditure are actual hours worked, not actual hours paid. You incur variable overheads only when work is being undertaken. Because of that, यहाँ पे there is no concept of idle time variance. Because there's no concept of idle time variance, guys, you will obviously take actual hours worked into consideration. So if they give us better that actual labor hours paid are 7,500 but actual labor hours worked are 7,000, तुम यहाँ के पूरे formulas में you will have to take only 7,000 into consideration. You will not take 7,500 hours into consideration. Are we clear about this? Yes or no, guys? समझ में आ गया? Now, what about the bifurcation of efficiency variance? हाँ बेटा, सब efficiency and mix कब आएगा वो? There's no such thing called sub efficiency and mix variance, guys. You will not have different categories of variable overheads being interchanged as such, guys. Variable overheads are variable overheads over. There's no such thing called we are going to change the proportion. ये महीने electricity की जगह पानी ज़्यादा लेंगे बोल के. It's not going to happen as such, guys. So that is why you do not bifurcate. There are only and only two variances: efficiency and expenditure. There's no bifurcation of efficiency variance into sub-efficiency variance and mix variance. Are we understanding this? Yes or no? Ardhamayanda? No. If details of number of hours worked are not given, there is no way that you compute efficiency variance and expenditure variance. In a lot of questions, they will not give us details of number of hours worked only. अब question ऐसा देगा, as per the budget, you were supposed to work for 5,000 units. Rudraksh, you will answer this better. And the variable overheads that you were supposed to incur was 1,50,000. Actually, you were ended up manufacturing 4,500 units. You incurred an output of 1,40,000. Compute variable overhead efficiency variance. Variable overhead efficiency variance. Rudraksh. क्या और धैर्य किसी और का चेहरा दिख रहा है? मंजरी, what will be variable overhead efficiency variance बेटा? 1 lakh. क्वेश्चन जो पूछ रहा हूँ उसका जवाब देना बेटा, ठीक है? यस रुद्राक्ष. Variable overhead efficiency variance. Raghav. 5,000 adverse. Sanvi. No idea. Correct, beta. No idea. I also do not have an idea. You should also not have an idea about it. It cannot be computed. अब भी बोला, if details of time are not given, you cannot compute efficiency variance. ये लोग जोश में आके 5,000. 5,000 is not even expenditure variance. 5,000 is overall variance. What proportion of that is efficiency? What proportion of that is expenditure, guys? It can never be computed. You will be able to compute efficiency and expenditure if and only if number of hours are to measure efficiency, guys. They should give us something. No, I tell you that you solved 5 questions. What's your efficiency? Don't know. बेवकूफो कौन है वापस 5 बोल के? The ones who are answering 5 नो बेटा कि 100 MCQ आए थे हमारे मैक्स में, हम 5 ही आंसर किए, इसलिए हमारी एफिशिएंसी 5% है बोल के. क्या आयुष? So guys, here standard variable overheads are known. Standard variable overheads, guys, would be rate per unit कितना था? 30 rupees, no? Standard rate per unit कितना था? अरे 5,000 adverse कितना था? हाँ. So standard variable overheads will be 30 multiplied by 4,500, 1,35,000. Yes, beta, correct, Bhumika. Actual overheads are 1,45,000. So what is the variance, guys? This is variable overhead cost variance. That is overall variance. In order to manufacture 4,500 units, as per standards, you're supposed to incur an expenditure of 1,35,000. But you're actually incurring an expenditure of 1,40,000 rupees. So that 5,000 adverse or such beta would be your variable overhead cost variance. What is efficiency? What is expenditure? Cannot be computed. Are we clear about this? Yes or no? When will you be able to compute it? Details of time should be given. So the first thing that we are learning here is that to compute standard overheads, you should always and always consider only standard hours for actual output, or you should directly multiply that by actual output. All right. These variable overheads, guys, variance is segregated into efficiency and expenditure variance based on the efficiency of employees. Are you clear? There will be no sub bifurcation of efficiency variance into sub efficiency variance and mix variance. वो नीचे का bifurcation नहीं आएगा. Is that clear? For both efficiency and expenditure variance. For both efficiency and expenditure variance. For both efficiency and expenditure variance. Efficiency and expenditure variance. We consider actual hours worked only. We consider actual hours worked only. Fixed overhead variances, guys. They're slightly different for one reason, that the amount of money that you are supposed to incur, guys, should not change with the change in output. Unlike variable expenditure, guys, where the total money that you spend will obviously depend upon the actual output that you are manufacturing, guys. Fixed overheads will not depend on the actual output. However, when an organization follows absorption costing, it still absorbs fixed overheads. Though the amount of overheads should not change with the change in output level, the amount of overheads that you absorb will definitely change with the change in output level. Total amount change nahi hona chahiye. But can the amount of expenditure beta that you're absorbing change? Yes or no? Let's say as per the budget beta, you were supposed to manufacture 5,000 units. The total amount of fixed overheads that you were supposed to incur 1,50,000 rupees. All right. Now, what will be your recovery rate, guys, or standard rate per unit? Diksha, how much will be your recovery rate? कुछ लिख रही है बेटा? Standard rate per unit, guys, will be 30. अभी तो लिखा है यार, same example दे रहा हूँ ना. Standard rate per unit, guys, will be 30 rupees. All right. What if your actual output manufactured, guys, is 4,500 units, but you still incur an amount of 1,50,000. Will there be any variance? We have manufactured only 4,500 units, but we have spent an amount of 1,50,000. Will there be any variance? Yes or no? Yes. The amount of overheads that we have absorbed, guys, will obviously be dependent on the actual output. I will be recovering an amount of 30 rupees per unit. If I have manufactured only 4,500 units, the amount of overheads that I have absorbed will be 1,35,000. This is the amount of overheads that you have absorbed, but how much is the amount of overheads that you have incurred? 1,50,000. We will still have an under recovery of 15,000 rupees. That itself is a variance. Variance is nothing but the amount of under or over recovery of overheads, guys. As per standards, how much is the amount that you've already included and what is the amount that you have incurred? The difference between these two, guys, will be the amount of overheads as such beta that needs to be absorbed. Are we clear about this? So in the first case, we are absorbing overheads at the rate of 30 rupees per unit. We have manufactured an output of 4,500 units. So for those 4,500 units, beta, the total amount of overheads absorbed should be how much? 1,35,000 rupees. समझ में आ रहा है बेटा दिशा? Yes or no? 1,35,000. We have incurred an amount of 1,50,000. We have an under recovery of 15,000. What if you end up manufacturing 5,000 units, but you incur an amount of 1,60,000? If you manufacture 5,000 units as such, guys, what is the amount that you will be absorbing? 1,50,000. But what is the amount that we have actually incurred? Will there still be any under recovery of overheads? Yes, we will have an under recovery of 10,000 rupees. You have to compare it with the amount of actual amount incurred, guys. समझ में आ रहा है नहीं आ रहा है? If you are manufacturing 5,000 units and the recovery rate is 30 rupees per unit, 30 multiplied by 5,000 units, the total amount of overheads absorbed is 1,50,000. That 1,50,000 will be compared with the amount of actual overheads, which is 1 lakh. We will have an under recovery of 10,000 rupees. Any doubt in this? Yes or no? क्या हुआ हर्षित? ऐसे सर पे हाथ रखे मत बैठो बेटा. I don't like it in the class. It's like कोई मातम में आए अपन. Did we? Yes or no? It doesn't give the right vibe, better. I can change the vibe. I have that right. So 4,500 units, 1,60,000 rupees, better. If you are manufacturing 4,500 units, what will be the amount of overheads absorbed? You will end up absorbing 1,35,000 rupees, guys. You've incurred an amount of 1,60,000. What will be the amount of under recovery of overheads? 25,000 rupees will be the amount of under recovery. Unlike variable expenses, for which the two reasons for variances, guys, are change in efficiency and change in expenditure. Keshav, what do you think will be the two reasons for variances here? What can be the likely reasons, better, for variance? अब इतना डिटेल में पढ़ाने के बाद में बेटा सानवी, what are the reasons for variances बेटा here? Perfect. Your fixed overhead variance is segregated into fixed overhead volume variance and fixed overhead expenditure variance. A change in volume should not affect the total amount of expenditure, but a change in volume will definitely have an impact on the amount of overheads that you are absorbing. In the first case, better, there was no change in expenditure, but we still had an under recovery of overheads because we did not manufacture an output equal to your budgeted level. Are we clear about this? Even if you manufacture an output equal to the budgeted level, there can still be under recovery or over recovery of overheads. Second case, we are manufacturing 5,000 units. We were supposed to manufacture 5,000. Did we not manufacture an amount equal to the budgeted level? Is there still an under recovery of overheads? If you still manufacture an output level guys equal to 5000 units as such, but there will still be under recovery or over recovery if the amount of expenditure incurred does not match with budgeted expenditure. Third case, there is variance on account of both the reasons. Neither the expenditure as such beta remained constant nor the amount of output remained constant. Are we clear? How to compute overall fixed overhead variance? Exact same formulas. It is under recovery or over recovery of overheads. That under recovery or over recovery of overheads we divide into two reasons. One is change in volume, the other one is change in expenditure. Change in volume के लिए बेटा we compare something called as absorbed overheads with budgeted overheads. If I am manufacturing an output level equal to my budgeted level, I would have absorbed budgeted overheads. अगर मैं 5000 units manufacture करता, my absorption would have been equal to 1,50,000. Then there should be no variance on account of change in volume. I will get a variance on account of change in volume if my output level beta does not match with budgeted output level. If my output level does not match with budgeted output level as such beta, the amount of overheads absorbed will not be equal to my budgeted overheads level. In the second case, I am manufacturing 5000 units. Don't you think I will end up absorbing 1,50,000? I still have a variance that is not on account of volume variance. That is because I did not incur an amount beta that is equal to my budgeted. So budgeted expenditure variance beta, matlab fixed overhead expenditure variance will be budgeted overheads minus actual overheads. Formulas change now. Are we understanding this guys? यहाँ पे कोई SR per unit लिखने की जरूरत ही नहीं है. You directly look at the values, you will know how much is volume variance, how much is expenditure variance. It's dead easy to arrive at the variances by looking at the numbers. Problem arises when we start trying to mug up the formulas better and try to substitute the variables. Are we understanding this? Overall variance अभी भी वही है बेटा. Absorbed overheads minus actual overheads. This is exactly how you computed under recovery or over recovery of overheads in overheads chapter. Abhi bhi wahi hai beta, there's no change. It's just that when you compute absorbed overheads, it should be based on standard relations. It should not be based on actual relations. Are we getting it? Yes or no kids? कोई doubt है इसमें? समझ में आ गया क्या बोल रहा हूँ मैं? Absorbed overheads कैसे calculate करते हो बेटा? It will be standard rate per hour into standard hours for actual output or standard rate per unit into actual output. Not budgeted output or standard output better. You always absorb overheads for the actual output. Budgeted overheads will be given in the question. If it is not given, it is standard rate per hour into budgeted hours. और इट इज ऑल्सो स्टैंडर्ड आवर्स बट फॉर बजटेड आउटपुट. दोनों का मतलब एक ही है. स्टैंडर्ड रेट पर यूनिट इनटू बजटेड आउटपुट. एक्चुअल्स आर एक्चुअल्स. ARAH. आर वी क्लियर? आर वी ऑल अंडरस्टैंडिंग फिक्स्ड ओवरहेड वेरिएंसेस गाइस? Material, labor, variable overheads, they are all the same. There's no change. Fixed overhead variances are different. It is because of the nature of the expenditure. The expenditure is supposed to remain constant. Pay attention guys, all of you. As per the budget, you are not supposed to copy this guys. Let's say you were supposed to manufacture 2000 units. Alright. The quantity of raw material that you were supposed to consume is 4000 kgs. Standard price of the raw material beta was 5 rupees. ठीक है? Actual output guys is 1800 units. When I'm computing guys standard quantity per unit, I know how much is it? कितना? 2 kgs. Standard price per kg of raw material कितना है? So my standard cost per unit of output कितना रहना चाहिए? So if I want my standard cost of raw material, I can directly write 10 rupees into 1800 units, or I can also write standard price per kg of raw material into standard quantity for actual output. In raw material, in wages, in variable overheads, I never did this. It was not required. Abhi, in majority of the questions, I will only be doing this. I will not have this. Answer will not change. 1800 units into 2 kgs, 3600 kgs. You either multiply 3600 kgs with 5 rupees per kg, or you directly multiply 1800 units with 10 rupees per unit. Standard rate per unit into actual output. अब रेट पर यूनिट ऑफ आउटपुट कितना है? 2 kgs into 5 rupees 10. If you're taking standard cost per unit of output, obviously you will multiply by actual output. If you are taking standard rate per unit of input, you will obviously multiply by the total standard input. So when you're computing standard wages, guys, how did we write so far? Standard rate per hour into standard hours for actual output. What if I would have taken standard rate per unit? It doesn't matter whether it is variable overheads, whether it is fixed overheads, whether it is material, whether it is labor. Standard के हिसाब से relation is always going to remain this only. Are we getting it? If I tell you बेटा that as per the standards labor cost per unit is 100 rupees, अब उसमें कितने घंटे है, कितना रेट पर आ रहे, भाड़ में गया. Standard labor cost per unit of output is how much? 100 rupees. You manufactured 1000 units. What should be your total standard cost? 1000 units multiplied by 100 rupees. You should not be bothered about what is your standard rate per hour or what is your standard hours for actual output. Irrelevant. Are we clear about this? Now, a quick recap. Variable overhead variances is exactly the same as labor variances. Your overall variance will still be standard cost minus actual cost, which will be SRSH minus ARAH. You divide your total variable overhead variance into two categories. One is efficiency variance, the other one is expenditure variance. When we say efficiency variance, guys, it is on account of efficiency of labor. That is why here you still write standard hours for actual output minus actual hours multiplied by standard rate per hour. And as far as expenditure variance is concerned, it will be SR minus AR multiplied by actual hours. Fixed overhead variances, guys, it's slightly different because the total amount of expenditure that you're incurring as such, guys, should not change with the change in output level. However, the amount of overheads absorbed will change with the change in output level. That is your overall fixed overhead variance is still standard fixed overheads minus actual fixed overheads, but instead of terming it as standard minus actual, we term it as absorbed fixed overheads minus actual fixed overheads. That we are dividing into two parts. How much is on account of change in volume, how much is on account of change in expenditure. Are we clear? Change in volume agar compute karna, you should compare absorbed fixed overheads with the amount of budgeted fixed overheads. Expenditure variance check karna, you will compare budgeted fixed overheads with actual fixed overheads. Are we all clear about this? अब आता है बेटा, what can be the reason for change in volume? Volume किस लिए change हो रहा है? The last part, guys. Once we are done with this, we are done with the content. All right. Let's say, guys, that you were supposed to study for 25 days in a month. The number of hours that you would have to study was about 10 hours. Okay? And let's say on an average each question takes about 30 minutes. Fixed है, ठीक है? छोटा नहीं कुछ भी नहीं, 30 minutes. So if you're working for 250 hours as such, guys, in the entire month, what will be the total number of units, guys? 500 questions. Yes or no? You would be solving about 500 questions. अभी क्लियर? ऐसा कोई डिटेल प्लान बनाता क्या बेटा? बहुत लोग बनाते बेटा. अभी ये लास्ट 2 हफ्तों से हम ओनली रिव्यूइंग फाइनल वालों के प्लान्स. क्या रहते हैं उनके plans? By the end of this day, they're done with this subject. By the end of this day, they're done with this subject. By the end of this day, this RTP, MTP will be done. By the end of this day, this will be done. By the end of they prepare Excel sheets, guys, for everything. ऐसे हवा में बात नहीं करते. They have a strict plan. They have 8 grace days in the next 3 months. They have 4 grace days after that. And then just in case something happens, if the health is not good during this, they'll have to use those 8 buffer days. That's not better. They say we are not just going and gambling with the exam and coming back. No, एक बार लिख रहे, let's just get done with it so that we are on the other side. Now, budgeted working days, guys, are 25 days. Number of hours per day as such beta is 10 hours. Number of questions as such, guys, are 500. Let's say, guys, that we have actually studied for 26 days. तुम भी क्या याद रखते हैं? We are doing more as such beta. 26 days. Are we clear, guys? Let's say I tell you this Sunday I'm taking a class. Wouldn't there be? तू ले ले, हम तो नहीं आते बोल के. So let's say beta that instead of studying for 10 hours a day, guys, you end up studying for 12 hours per day. All right, guys. Example ही लेना है बेटा. Hypothetical situation, guys. All right. 26 into 12 as such, guys. How many hours did we study for? 300 and if you would have solved everything as per standards in 312 hours as such beta, you should have solved about 620. Let's say that the actual number of questions that you have solved beta are 400. लगा दिया पूरी. All right. Please understand, guys. As per the budget, example है बेटा, समझो, it will be very easy to understand fixed overhead variances. All right. And ये पूरे logic है बेटा, they're easier to understand. So 25 days as such beta, 10 hours per day, 250 hours you were supposed to work for. You worked for more number of days. As per the budget, you were supposed to solve 500 questions. Actually, you've solved how many questions? There is a difference in volume. Volume कितने से लग गई बेटा यहाँ पे? 100 units. You should have solved 500 questions as per the budget, but you have solved only. Isn't there an adverse variance of 100 questions? What are the reasons? What went wrong here? 3 things. Calendar, capacity, efficiency. Calendar बोलता है, did you work for the same number of working days or not? The question here is, yes, calendar is favorable. Forget 25 days, you worked for how many days? 1 day extra. अगर सब कुछ budget के हिसाब से जाता बेटा, 500 questions in 25 days, that means 20 questions per day. So on account of my calendar, I have 1 day favorable. Yes or no? 1 day favorable beta is 20 questions favorable. Or 10 hours favorable. Shouldn't you be working for 10 extra hours? 10 hours favorable beta should be giving me how many questions? Are you all following? If you're working for 1 extra day as such beta, your output should have increased by 20 questions. Then comes capacity. Capacity says, okay, number of working days ho gaya. In those actual working days, that is 26 days, did you fully utilize capacity or not? घर वाले तुमको पूछे, did you study all the days of the month? You say yes. They are thinking that you're studying for 12 hours a day, we are studying for 12 minutes a day. But you are not lying. They only asked, did you study on all days of the month? The answer is definitely yes, we studied. Hi Anna beta. So when you talk about capacity variance, guys, there's nothing that went wrong in capacity also. In fact, we overstretched here. Instead of working for 10 hours a day, guys, you're working for... If you're working for more number of hours, guys, shouldn't the output increase? 26 days mein beta, we have worked for 2 hours more. 52 hours extra mil gaya apan ko aur. Now actual working days only should be considered. We have already moved from 25 days to 26 days. In 26 days beta, you were supposed to work for 10 hours a day, but you work for how many hours a day? How many hours extra? 52 hours extra. That means your output should have increased by 104 questions. Yes or no, guys? अब आता है बेटा तुम्हारी efficiency. 26 days, 12 hours. That means 312 hours. Normally in 312 hours you should have solved how many questions? But how many questions did we solve? Efficiency is adverse. 224 summation 100 questions adverse. That's a change in volume. Are we getting it? Change in number of working days, change in capacity, and finally efficiency. Change in calendar, change in capacity will not consider actual output anywhere into consideration. Actual output comes into consideration only and only for efficiency variance. You worked for more number of days as such, guys. You worked for more number of hours per day. In spite of that, output did not increase. Efficiency is at fault. Calendar and capacity will still be favorable. Let's say, guys, that instead of 25 days, we worked for 24 days. Calendar should be favorable or adverse? You worked for less number of days as such, but obviously it should be adverse. Let's say yesterday, instead of leaving you at 4:30, I left you at 4:10. Capacity should be favorable or adverse? Adverse. In spite of that, if you're solving the same number of questions, efficiency is favorable. Are we clear about this? All the three factors collectively will determine, guys, what is the impact on the volume of the company. How many units did they manufacture? ये सब ऐसे नहीं लिख सकते एग्जाम में. This is all for our understanding as to what is calendar variance, capacity variance. There are formulas for everything. We'll have to write them in the form of formulas only. But are we all clear about this information? Yes or no, guys? Now, guys, I'll replace those questions with output. Let's say as per the budget, the number of working days were 25. The total number of hours were 25,000 hours. The output that you were supposed to manufacture beta was 5,000 units, 5 hours per unit. The total amount of fixed overheads that you were supposed to incur beta is 1 lakh rupees. Following? Yes or no, guys? Random figures है बेटा, ठीक है. Standard rate per hour कितना हो जाएगा? श्रीनिवास गारू, అరే గాడదా చూసి చెప్పొచ్చు, క్యాలిక్యులేటర్ అవసరం లేదు. Standard rate per hour, guys, as per the budget you were supposed to incur 1 lakh rupees over how many hours? 25,000 hours. So your recovery rate will be 4 rupees per hour. Standard rate per unit अगर पूछा तो 1 lakh you will divide by what? 5,000 units. How much will that be better? 20 rupees per unit. If I ask standard rate per day, 1 lakh will be divided by, we won't be using this, guys, but agar aa gaya to just in case we should know how to do it. 1 lakh divided by 25, how much will that be better? 4,000 rupees per day. What is the standard time per unit? 25,000 hours beta you should have taken to manufacture 5,000 units. 5 hours per unit. I have all the standards that I need. All right. Are we all following? Let's say, guys, that the actual number of working days were 24. The actual number of hours that I have worked for is 23,000 hours. The actual output manufactured is 4,950 units. Bhad mein gaya actual expenditure. It's not needed because you need actual expenditure only to compute expenditure variance. You don't need actual expenditure to compute volume variance. All right, kids? Are we all following, guys? Now, we introduce a new term beta called as revised budgeted hours. Revised budgeted hours are budgeted hours but for actual working days. As per the original budget, you were supposed to work for 25,000 hours, but in how many days? If the number of working days get reduced to 24, the number of hours will come down to 24,000 hours. It is 25,000 hours divided by 25 days multiplied by 24 days, and that beta would be 20. अब आता है calendar variance. Calendar variance, guys, if you have all the details that you remember better from this, is it favorable or adverse? Instead of working for 25 days, we have worked only for 24 days. You reduce the number of working days, your output is undoubtedly going to reduce. This calendar variance is adverse. 1 day adverse. If you are expressing it in days, you multiply by standard rate per day. If you are expressing it in hours, you multiply by standard rate per hour. 1 day के वजह से how many hours did we lose? It is 1 day adverse or it is 1000 hours adverse. 25,000 hours directly came down to 24,000 hours. The formula for calendar variance, guys, is actual working days minus budgeted working days. Because I'm taking difference in days, what should I multiply by? Standard rate per day. Or revised budgeted hours minus budgeted hours into standard rate per hour. So it's either 24 days minus 25 days multiplied by 4,000 per day, or it is 24,000 hours minus 25,000 hours into 4 rupees per 4 rupees here na? Standard rate per hour beta is 4 rupees. Doesn't matter whether this or that beta, the answer is going to be 4,000 adverse. Are you all understanding this? On account of the number of working days, we are losing out on 4,000 rupees. Any doubt in this? Any doubt, guys? ये फॉर्मूला याद रखना जरूरी हो गया बेटा. टेंशन मत लो, कल वापस रिवाइज कराऊंगा पूरा, बट फिर भी समझ में आया ये. अब आता है बेटा the next part, that is capacity variance. Once we shift away, guys, I say study material में they talk about efficiency first, then they talk about capacity, then they talk about calendar. It doesn't make sense to go in that order, but it's always best to go in the other order, because first you talk about change in working days. Once that is done, we now know that we are working for how many days? 24 days. उसमें बात करते हैं. In 24 days, as per budget, how many hours were you supposed to work for? 24,000 hours, not 25 beta. That is original budget. अभी मैं in 24 days बोल के लिखा रहा हूँ. I have shifted away from 25 days to, but what are the actual hours that you worked for? लिखा है अभी यहाँ पे कितना है? Did I lose again? 1,000 hours adverse. The formula, guys, is actual hours minus revised budgeted hours into standard rate per hour. Actual hours are 23,000, revised budgeted hours are 24,000 into 4 rupees. Another, are we getting it? Finally, efficiency. तुम experts हो बेटा. Efficiency हर जगह efficiency रहता. What is your actual output? 4,000. To manufacture 4,950 units, guys, how many hours should you have taken? Standard hours for actual output. The ones who forgot, beta, standard time per unit is 5 hours. So it should be 4,950 multiplied by 5 hours. 24,000. The actual hours that you have worked for is 20. So my efficiency variance will be standard hours for actual output minus actual hours multiplied by standard rate per hour. So that will be 24,750 minus cell phones bolega beta 23,000 into what is the rate per hour? 7,000 favorable. Positive answer hai beta. 4,000 adverse, 4,000 adverse, 8,000 adverse plus 7,000 favorable. Overall variance is 1,000 adverse. How do you compute your overall volume variance better? Volume variance, absorbed fixed overheads minus budgeted fixed overheads. Isn't absorbed better standard rate per unit into actual output? My standard rate per unit is per unit 20 या फिर बेटा as per the original budget 5,000 units, actual output 4,950. Are we not manufacturing 50 units less? 50 units less into 20 rupees per unit. 1,000 adverse. That should be my overall volume variance. Are we all getting it? अरे हाँ रे लिख रहा हूँ. Minus budget कितना था? 1 lakh. So this will be 1000 adverse. Calendar variance क्या है? It is on account of change in number of working days, guys. Capacity variance, beta, is on account of capacity utilization. How many hours were you supposed to work for? How many hours did you actually work for? Finally, efficiency variance talks about well and good. जो काम किया at least वो ढंग से किया क्या? You worked for so many hours a साथ बेटा. Did you work efficiently? Yes or no, guys? There's one student studying for 16 hours a day, then another student studying for 12 hours a day, guys. Not necessary that the student studying for 16 hours a day, guys, will finish more syllabus. The efficiency also matters. Hi, Anna, guys. Fixed overhead variance, guys. How do you compute the overall fixed overhead variance? It will be absorbed fixed overheads minus actual fixed overheads. And how do you compute absorb fixed overheads better? Either standard rate per unit into actual output or standard rate per hour into standard hours for actual output. This fixed overhead variance we divide into two categories. What is that beta? Revise कर लो पहले, बाद में कॉपी कर लेना. Fixed overhead volume variance and the other one is fixed overhead expenditure variance. How do we compute fixed overhead volume variance? You compare the amount of absorbed fixed overheads, guys, with what you were supposed to absorb as per the budget. That is budgeted fixed overheads. Your fixed overhead expenditure variance, guys, will be budgeted fixed overheads minus actual fixed overheads. Are we clear about this? After that, beta, your volume variance is segregated into three categories. You start with calendar variance. Then beta there is capacity variance, and finally beta there is efficiency variance. Yes or no, kids? Calendar variance beta is in number of hours, it is revised budgeted hours minus budgeted hours into standard rate per hour. Capacity variance, guys, is actual hours minus revised budgeted hours into standard rate per hour. Efficiency variance is standard hours for actual output minus actual hours into. But यहाँ देखे रिवाइज करना पड़ा. This can also be written as what, guys? Actual working days minus क्या बोल रहे नहीं मालूम into standard rate per day. बाकी पूरा बेटा we write in terms of number of hours only. That's it. These are your fixed overhead variances beta. Alright beta. J-type students, there's nothing that you missed. The screen was stuck. I had to just restart. They've given us the production, guys, standard and actual. They've given us working days. They've given us fixed overheads and variable overheads. Requirement is to calculate variable overhead variance and fixed overhead variance में expenditure and volume variance. हो गया variance already? करो. Are details of time given? There is no way that you can compute efficiency variance and expenditure variance. The only variance that you can compute beta is variable overhead cost variance, for which you will write standard rate per unit into actual output minus actual variable overheads incurred. That's the only thing that you're supposed to do. Question number 22. दोनों details साथ में मत लिखना बेटा, confusion रहेगा. Just write one after the other. First we will write budget. दोनों मतलब fixed overheads भी combine मत करो same table में. हाँ, तुम लोग वही experts हो बेटा. मेरे को थोड़ा confusion होता, अभी सीख रहा हूँ मैं, तो इसीलिए मैं ऐसा लिखता हूँ, ठीक है? 12,000 and 12,000. Your details of time is not given. You will make a note of that, guys. सबके सब वो नोट लिखना कंपलसरी. As details of time are not given, we cannot compute efficiency and expenditure variance. As details of time are not given, we cannot compute efficiency and expenditure variance. What will be the amount of variable overhead variance, beta? You will write standard variable overheads for actual output minus actual variable overheads. Standard variable overheads for actual output, beta, should have been 11,400. This minus 12,000. The amount will become 600 adverse. Overheads, guys, you will write those details again. Budget and actual, beta. What is the amount of output as per the budget? 4,000 units. The amount of fixed overheads as per the budget, beta, is 40,000. So what should be your standard recovery rate per unit, beta? You will have to recover 40,000 divided by 4,000 units, that is 10 rupees per unit. Actual output कितना है? 3,800. Actual expenditure 39,000. To compute fixed overhead variances, we compute absorbed overheads. That is exactly the same as standard fixed overheads, guys, for actual output. This will be written as standard rate per unit multiplied by actual output, which will be 10 rupees into 3,800, beta, 38,000. Once you get absorbed overheads, guys, you get all the answers. If you compare absorbed overheads with budgeted overheads, you get volume variance. And if you compare budgeted overheads, beta, with actual overheads, you get expenditure variance. Are we clear about this? So after this, beta, you will write, revise करके आए ना पूरा ये, fixed overhead volume variance, guys, will be equal to absorbed fixed overheads minus budgeted fixed overheads. Absorbed is 38,000, guys. Budgeted is 40,000. So 2,000 adverse. We are absorbing 2,000 less because the volume is 200 units less than budgeted. Your fixed overhead expenditure variance, guys, will be equal to budgeted fixed overheads, beta, minus actual fixed overheads. Budgeted fixed overheads, guys, are 40,000. Actual fixed overheads are 39,000. Irrespective of the output, this expenditure should not have changed, guys. So this will be your fixed overhead expenditure variance. Are we clear about this? Total दोनों का बेटा fixed overhead cost variance or just fixed overhead variance. Your overall fixed overhead variance can also be written as, guys, absorbed minus actual. Absorbed is 38,000, actual is 39,000. You will have an adverse variance of 1,000 rupees. ये question में calendar variance compute कर सकते हो बेटा. We are working for one extra day. As per the budget, it is 40,000, 2,000 favorable. फायदा नहीं है, but हाँ, it is actual working days minus budgeted working days multiplied by standard rate per day. For variable overheads, guys, we do not need revised budgeted hours. We will be needing that only for fixed overhead variances. In this question, guys, whether it is standard rate per unit or whether it is standard rate per hour, it will remain same because the number of hours required per unit is 1. Same nahi, 1. Time per unit, beta. Check कर रहा था बेटा. Proud of you. So standard rate per hour, beta, would be 60,000 divided by what? 30,000 hours. कितना हो जाएगा? 2 per hour. Or even if you compute standard rate per unit, you actually don't need it. It will still be 60,000 divided by 30,000 units. 2 rupees per unit. In order to compute variable overhead variances, you need actual hours, you need standard hours, you need standard rate, you need actual rate, just like labor variances. Pehle you will have to understand that, guys, as to what are the variables required. Only then you will know how to proceed with the question. The variables required will be the same as employee variances: standard rate, actual rate, standard hours, and actual hours. You know that your standard time per unit will be how much, better? As per the budget, 30,000 hours to manufacture how many units? 30,000 units. That will be 1 hour per unit. What will be the standard time, guys, for actual output? Actual output is 32,500 units. That multiplied by 1 hour per unit, and that will still be 32,500 hours. You got standard hours, you got standard rate per hour, you got actual hours, you got actual rate into actual hours. Actual rate compute mat karna, points mein aayega. Just leave it like that. These are the variables that you need, guys, for variable overhead variances. अरे 66 चुप 66,000 हो गया, ये हो गया, वो हो गया. Variable overhead efficiency variance is 1000 adverse better. Variable overhead expenditure variance, ये वैष्णवी done बेटा. Standard rate minus actual rate into actual hours. You will write this as what? Standard rate into AH minus AR AH. How much is standard rate better? 2 rupees into 33,000 hours minus AR AH की जगह 68,000. This will become 2,000 adverse. Your total variable overhead cost variance or just variable overhead variance will become 3,000 adverse. That is standard rate per hour into standard hours for actual output minus AR/AH. 2 rupees into 32,500 beta minus 68,000. This will become 3,000 adverse. Or you can simply add the above two values, guys. You will get the same answer. These are your variable overhead variances. Fixed overheads, guys. Budget and actual. याजद हो गए बेटा पूरे, आ गए आंसर्स आ गए. Budget and actual beta. Output is same, guys. That is 30,000. What we wrote earlier, 32,500. Number of hours, guys, are number of hours as per the budget 30,000. 33,000 is not standard hours for actual output beta. Remember, it is actual hours. ये जो है, this is budgeted hours. Fixed overheads, guys, are 45,000 and this is 50,000. Working days beta are as per the budget 25 days. Because you're working for one extra day, calendar variance should be favorable, guys. The first thing that you will do is either compute standard rate per hour, guys, or compute standard rate per unit. Both of them would be same. This is 1.5 per hour, guys. Standard rate per unit beta would be 45,000 divided by 30,000 units. 1.5 per unit. Your standard hours for actual output, guys, whether it is variable overheads or whether it is fixed overheads, does not change. It will be 32,500. Yes or no, kids? Your revised budgeted hours beta would be, if you were supposed to work for 30,000 hours in 25 days, for 26 days it will be 31,200 hours. These are all the values that you will be needing, guys, in order to compute variances. Please check. Standard rate per hour 1.5. Standard rate per unit is also 1.5, guys. Your revised budgeted hours are 31,200. Start with calendar, then move on to capacity variance, and then finally efficiency variance. If you're done, guys. So fixed overhead calendar variance. What is the formula for fixed overhead calendar variance? Revised budgeted hours minus budgeted hours into standard rate per hour, or actual working days minus budgeted working days multiplied by standard rate per day. Anything is fine. So this will be 1800 favorable. How much will be your fixed overhead capacity variance? In those 26 working days, as per the budget, you were supposed to work for 31,200 hours, but you ended up working for how many hours? 33,000 hours. Was there an excess capacity utilization or deficit? Excess. That is why it is favorable beta. 2,700 favorable. And then fixed overhead efficiency variance. The output that we have manufactured should have been completed in how many hours? 32,500, but we actually took how many hours? 33,000 hours. So that will be 32,000. Formulas mat likho beta. Whenever you're computing variances, try to recollect the entire concept of the variance and keep revising. That will be easier rather than just substituting formulas. Then beta, fixed overhead volume variance. As per the budget, we were supposed to manufacture 30,000 units. We ended up manufacturing 32,500 units. Because you're manufacturing 2,500 units more, we will absorb more. That will be 2,500 into 1.5, 3,750. Absorb fixed overheads minus actual fixed overheads. Absorbed can be written as standard rate per unit into actual output, which will be 1.5 per unit into 32,500 minus actual beta is क्या कर रहा हूँ यार minus budgeted guys. Realize हुआ बेटा minus 45,000. This will become 3,750 favorable. And finally beta, fixed overhead expenditure variance. And that beta is direct. Budgeted minus actual. Budgeted kitna hai? 45,000. Actual beta is 50,000. So this will be 5,000 adverse. All put together beta 1,250 adverse. You can recompute that as absorbed overheads minus actual overheads. These are all your fixed overhead variances. Sixth one. XYZ company has established the following standards for factory overheads. Your variable overhead rate per unit is 10 rupees. Fixed overheads per month are 1 lakh. Capacity of the plant is 20,000 units per month. We will have to assume that budgeted production is also equal to 20,000 units. We are budgeting that we are going to operate at 100% capacity. So budgeted output is 20,000 units. The actual data for the month are as follows. Actual overheads incurred is 3 lakhs. Actual output is 15,000 units. You're required to calculate production volume variance, overhead expenditure variance. Volume variance is pretty simple guys, because volume variance arises only under fixed overheads, not under variable overheads. I know what is the amount of my budgeted fixed overheads. I know what is the amount of budgeted output. I know what is the amount of actual output. Will I be able to compute my standard recovery rate per unit? Budget के हिसाब से fixed overheads कितने? 1 lakh. 1 lakh divided by 20,000 units. Your recovery rate per unit is 5 rupees. Correct बेटा वर्षा? Actual output कितना है? 1 सेकेंड बेटा. कौन से क्वेश्चन में मालूम है हम लोग? कौन से क्वेश्चन में? 27 बेटा. मैं अभी बोला 26 बाद में करेंगे बोल के. नहीं. Actual output is 15,000 units, but our recovery rate is 5 rupees per unit. What do you think will be the amount of overheads absorbed? 75,000. Overheads absorbed are 75,000. Overheads budgeted guys were 1 lakh. What will be the under recovery due to volume? That's the answer to the first bit. Production volume variance is 25,000 adverse. So on my cancel I am at 25,000 adverse. Yes or no guys? Now the second part. Overhead expense variance. How do I compute fixed overhead expenditure variance? What's the formula guys? Budgeted fixed overheads minus. I know budgeted fixed overheads are 1 lakh. How much is actual fixed overheads? 1 lakh 50,000. Whoever is assuming 1 lakh 50,000 as such better to be actual fixed overheads, you are assuming there is no variable overhead variance. 75. How 75,000? फिक्स्ड है बेटा, वो ऐसे थोड़ी प्रोपोर्शनेटली चेंज होता है. क्या कर रहा है फराज? शादी के लिए स्टेज के डेकोरेशन के लिए 10 लाख रुपए दिया समझ. तू थोड़ी डेकोरेशन वाले को बाद में बोलेगा मैं तो 1000 लोगों को बुलाया था 800 लोग ही आए. नहीं दे तू प्रोपोर्शनेटली 8 लाख दे तू बोल. You can assume them to be fixed. What to be fixed? So you will assume that the actual fixed overheads will remain at 1 lakh. So the entire 2 lakh rupees will be variable overheads. remaining. 3 lakhs is actual overheads incurred, guys. This includes variable and the some portion of this variable in nature, the some portion of this fixed in nature. Few of you are assuming that variable will remain at 10 rupees per unit. So the entire variance is only on account of fixed expenditure. Few of you are assuming that fixed will remain at 1 lakh. So the entire variance is only on account of variable expenditure. We do not have to assume anything, guys. We will not be computing fixed overhead variance separately. Pay attention. इसलिए मैं बोला it is slightly different. Your fixed overhead cost variance is segregated into volume variance, which is absorbed fixed overheads minus budgeted fixed overheads. Yes or no, beta? Your fixed overhead expenditure variance will be budgeted fixed overheads minus details of time are not given. There is no way that you will be able to segregate variable overhead variance, guys, into efficiency and expenditure. Hi, Anna. You will not be able to segregate variable overhead variance into efficiency and expenditure because details of time are not given. To compute your overall variance, you will write standard rate per unit into actual output minus actual variable overheads. I cannot even compute variable overhead cost variance separately because actual variable overheads are not given. I cannot compute fixed overhead expenditure variance separately because actual fixed overheads are not given. All of this put together is a second variance, which is क्या है बेटा नाम? Overhead expense variance. You will not be able to compute fixed overhead expenditure variance separately. You will not be able to compute variable overhead cost variance separately. We will simply club all of them, guys. That is why the requirement is two variances. एक production volume which definitely can be computed separately. बाकी पूरा ऐसा बेटा will come under one head. Sir, how are we supposed to identify? Very simple. If actual overheads are not given separately, guys, and the requirement states compute production volume and overhead expense. जैसे next question also. Question number 27. You require to compute production volume and overhead expense variance. वहाँ पे भी बेटा actual cost is not separately given for variable overheads and fixed overheads. Are you understanding this? Which means दोनों में से एक question compulsory revise करना है exam से एक दिन पहले. समझ में आ रहा है नहीं आ रहा है? Now guys, write down. I'll explain. Standard rate per unit is given as 10 rupees. Budgeted fixed overheads are 1 lakh. Budgeted output 20,000 units. Actual variable overheads, actual overheads, guys, variable plus fixed is 3 lakhs. And actual output is 15,000 units. I'm sorry guys, ये लिखना था बेटा मेरे साथ में क्योंकि मैं अभी पढ़ाया ना ऊपर. एक्सपेंडिचर नहीं, एक्सपेंस मतलब पूरा वो जो ओवरहेड रिलेटेड है उसके रिलेटेड पूरा खर्चा क्या है कंप्यूट करके बोलो. अंतर्यामी अगर है तो एफिशिएंसी आता, वरना नहीं आता. एफिशिएंसी सेपरेटली पॉसिबल ही नहीं है गाइस. The first, whether this question or any other question, if details of time are not given, there is no way you will be able to compute efficiency variance separately. वो तो डाउट आना ही नहीं चाहिए कि can we compute efficiency बोल के. We can frame a question and then compute efficiency variance. Yes, but are we all done with this? Right on, beta. as details of time are not given, as details of time are not given, as details of time are not given, details of time are not given, we won't be able to compute variable overhead efficiency and we won't be able to compute variable overhead efficiency and expenditure variance separately. We won't be able to compute variable overhead efficiency and variable overhead expenditure variance separately. Variable overhead efficiency and expenditure variance separately. Variable overhead efficiency and expenditure variance separately. Next line. Actual variable overheads and fixed overheads are also not given separately. Actual variable overheads and fixed overheads. Actual variable overheads and fixed overheads are also not given separately. Actual variable overheads and fixed overheads are also not given separately. Separately. We cannot assume that actual variable overhead per unit remains at 10 rupees. We cannot assume actual variable overhead per unit remains at 10 rupees. Actual variable overhead per unit remains at 10 rupees. Or actual fixed overheads remains at 1 lakh. Or actual fixed overheads remains at 1 lakh. We cannot assume actual variable overhead per unit remains at 10 or actual fixed overheads which remains at 1 lakh. Remains at 1 lakh. So my statement, तुम कुछ भी assumption ले रहे हो, you're assuming that one variance does not exist. If one variance does not exist as such, the entire variance will be on account of the other factor. That is why no such assumption. Is that clear? Next, beta. Fixed overhead expenditure variance also cannot be computed separately. Fixed overhead expenditure variance also cannot be computed separately. Fixed overhead expenditure variance also cannot be computed separately. Cannot be computed separately. Fixed overhead expenditure variance also cannot be computed separately. उसके नीचे बेटा copy this. Fixed overhead variance volume variance, can this be computed? Definitely yes, can be computed. Fixed overhead expenditure variance, variable overhead cost variance, we're dividing into variable overhead efficiency variance and variable overhead expenditure variance. अब ये तीनों मिला के बेटा क्या हो जाएंगे? ओवरहेड एक्सपेंस वेरिएंस. On the face of it, guys, isn't your variable overhead recovery rate how much? 10 rupees per unit. And fixed overhead recovery rate कितना है? 5 rupees per unit. That means both put together. Stop writing and listen better. Both variable and fixed overheads per unit, guys, together will be 15 rupees. How many units did you actually manufacture? 15,000. 2,25,000 will be overall overheads absorbed, whether it is variable, whether it is fixed. Collectively, we will end up absorbing an amount of 2,25,000. How many overheads did we incur? 2,25,000, guys, minus 3 lakhs. How much should be your overall variance? 75,000 adverse. जिसमें से बेटा अभी you computed that volume variance was 25,000 adverse, so the balancing figure will be 50,000 adverse. We cannot write like that. We will compute, but you should come back to an answer of 50,000 adverse only. Variance, guys, is dead easy. You're just comparing standard cost with actual cost. ये समझ में आया मैं अभी क्या किया? 10 rupees per unit variable overhead था, 5 rupees per unit is fixed overhead. Collectively it is 15 rupees. That 15 rupees per unit multiplied by 15,000 units. Standard rate per unit multiplied by actual output will become your standard expenditure. 2,25,000. That 2,25,000, if I compare with the actual amount incurred, what is the actual amount incurred? I will get overall variance, overall under recovery. My overall under recovery of overheads is 75,000 adverse. जिसमें से I know that my production volume variance is 25,000 adverse. The remaining 50,000 beta will be सब मिला के overhead expense variance. Is that clear? Anyways, ये copy करो पूरा खत्म करो लिख लिया. Next, start computing guys fixed overhead volume variance. Fixed overheads के लिए बेटा, what is your standard rate per unit? Budgeted fixed overheads divided by budgeted output. Absorbed fixed overheads beta would be standard rate per unit multiplied by what beta? Actual output. 5 rupees per unit into 15,000 units, 75,000. So production volume variance will be equal to absorbed fixed overheads minus budgeted fixed overheads. 75,000 minus 1 lakh. नहीं सुधरते नहीं थोड़े लोग. नहीं सुधरते नहीं थोड़े लोग. 25,000 adverse. एग्जाम में बार बोल के मत लिखना बेटा, पूरा वेरिएंस बोल के वर्ड लिखना. VAR stands for value at risk. It does not stand for variance. हाँ लिख लिया बेटा सब लोग ये. नाउ बेटा all of you stop writing and pay attention. Overhead expense variance. ये केस में ही बेटा, not in every case. Overhead expense variance I told you is equal to fixed overhead expenditure variance plus what is the other variance that we are adding to this? Variable overhead cost variance. Yes or no guys? How do you compute fixed overhead expenditure variance? Budgeted fixed overheads minus actual fixed overheads. This is how you compute your fixed overhead expenditure variance. How do you compute variable overhead cost variance? Standard rate per unit. Remember, it is only for variable overheads into actual output minus actual variable overheads. हाँ या ना बेटा? Budgeted fixed overheads we already know is 1 lakh. Actual fixed overheads I do not know. Standard rate per unit guys for variable overheads is 10 rupees multiplied by how much? 15,000 units minus actual variable overheads. So this guys will become 1 lakh plus 1,50,000 minus actual fixed overheads plus actual variable overheads. I do not know how much is actual fixed overheads and variable overheads separately, but what is the collective amount? 2,50,000 minus 3 lakhs. What will be the variance guys? 50,000 adverse. Are we understanding this? Yes or no beta? Premier Industries has a small factory where 52 workers are employed on an average for 25 days a month and they work for 8 hours a day. The normal downtime is 15%. When you know that there is going to be a downtime, guys, it will be incorporated in the budget. So 52 workers multiplied by 25 days in a month multiplied by 8 hours per day. How many hours? 10,000. Budgeted hours beta would be 10,400 minus 15%. You will take budgeted hours as only 8,840. Are we clear, guys? The firm has introduced standard costing for cost control. Its monthly budget for November 2020 shows that the budgeted variable and fixed overheads are 1,06,080 and 2,21,000. एक बार बेटा you compute that, it's easier. ठीक है? समझ में आ रहा है नहीं आ रहा है? मतलब you just write those and go variance wise. पहले variable expenditure का करना, बाद में fixed expenditure. So guys, first write that beta clearly, number of hours as per budget. Total hours before downtime. Total hours before downtime. How many workers? 52 workers multiplied by 25 days multiplied by 8 hours. कितना बोले थे बच्चों? 10,400 hours, guys. So budgeted hours will be equal to, from 10,400 you're going to deduct a downtime of how much? 15% downtime. 8,840 hours. Now you will write, guys, the best part about the question is that actual production is already given in standard hours. Matlab that is SH for AO. Are we clear? SH for AO is already given in the question, so it will be easier for you to get the variances better. ये जो fixed overhead budget variance है बेटा, that's a new word that they've used in that question, but that is nothing but expenditure variance. Common sense use करो तो समझ में आ जाएगा बेटा. Capacity plus efficiency anyways will give us volume variance. They will not ask us to compute volume variance again. So that budget variance you can mark it as important ताकि वो word at least देखे बाद में. Second bit, first point, fixed overhead budget variance है ना, mark it as important and बाजू में लिखना expenditure variance. Important मतलब just to go through the point later. Fixed overhead budget variance क्या है? अरे अब भी इतना चिल्ला के एक्सपेंडिचर बोल रहा, वापस वॉल्यूम लिख रहा तो सुनाई देता नहीं देता था बाकी सबकी बातें. गाना गा रहा, आंखों में तेरा ही चेहरा. Yes, guys. Now that you know better that this is budgeted hours, write all the details related to variable overheads. I will give you those ratios now, beta. I will make you write, but I'll be explaining the concept later. अभी variable overheads related पूरा लिखो बेटा. Budget के हिसाब से how many hours? Correct. गधे यहीं तो है ऊपर. Actual hours are 8,100, guys. What are the overheads? Variable overheads as per the budget? 1,06,080. Actual variable overheads? 1,02,000. Beta. SH for AO is already given in the question. 8,800 hours. All you have to do, beta, is just compute standard rate per hour using budgeted data. Once you get standard rate per hour, you're done with variable overhead variances. Correct, kids? Yes, sir. All right, guys. Standard rate per hour beta for variable overheads will be 1,06,080 divided by 8,840. How much is that? 12 rupees per hour beta. Variable overhead efficiency variance, guys, will be equal to, you have all the values here. You will write standard hours for actual output minus actual hours multiplied by standard rate. So 8,100 minus 8,800 minus 8,100 multiplied by 12 rupees. That will be 8,000. This will be variable overhead efficiency variance. Did you all get this, guys? Variable overhead expenditure variance, beta. How many should done with this? Expenditure variance, guys. Vanga avaleda. Standard rate minus actual rate into AH. Because you will get actual rate in points. What will you do, beta? You will write standard rate into actual hours minus actual rate into actual hours, so that you do not have to worry about writing how many decimal points. So standard rate beta is 12 rupees multiplied by 8,100 hours minus this is 1,02,000. कितना हो गया ये? 4,800 adverse beta. This put together is 3,600 favorable. This will be variable overhead variances. Please check if you all got the same answer. As per the budget beta, what are the overheads? Number of hours were 8,840. Actual hours beta are 8,100. Actual fixed overheads are 2 lakhs. 2 lakh. Standard rate per hour beta will be equal to kitna? 2,21,000 divided by 8,840 hours beta, that will be 25 rupees. Standard hours for actual output already diya hua hai. So you will first compute absorbed fixed overheads, guys. Absorbed fixed overheads will be standard rate per hour multiplied by standard hours for actual output. That will be 25 rupees multiplied by standard hours kitne the 8,000. How much is this? Absorbed fixed overheads beta is 2,20,000. किसके लिए बेटा? एक्सपेंडिचर नहीं कर रहा हूं मैं, बस absorbed कंप्यूट करके रख रहा हूं, जरूरत पड़ी तो बोल के. Budget, guys, 8,840 and overheads are 2,21,000. Actual 8,100 and 2 lakhs. Are you all checking this? First bit, guys, there. You have to compute fixed overhead. What? I'll compute capacity variance, guys. Capacity variance ke liye, guys, I will have to assume what? RBH is equal to BH. Number of working days ka information nahi hai, guys. Actual hours are 8,100. RBH beta will be 8,840 multiplied by 25 rupees. Kitna ye? 18,500 adverse. Fixed overhead, guys, efficiency variance will be equal to standard hours for actual output minus actual hours multiplied by standard rate. Standard hours for actual output was 8,800 minus 8,100 multiplied by 25. 17,500 favorable. इन दोनों को अगर ऐड करता हो guys, I'll get fixed overhead volume variance. वो नहीं पूछा, बस लिख रहा हूँ. That will be equal to absorbed fixed overheads minus budgeted fixed overheads. Absorbed में ऊपर लिख चुका हूँ बेटा. It is 2,20,000 minus 2,21,000. You will get an adverse variance of 1,000 adverse. Fixed overhead budget variance, guys, मतलब expenditure variance. This fixed overhead expenditure variance, guys, will be equal to budgeted fixed overheads minus actual fixed overheads. Budgeted fixed overheads were 2,21,000. Actual fixed overheads are 2 lakhs. So this will be equal to 21,000 favorable. All put together 20,000 favorable. This, as far as ratios are concerned, beta now, the three ratios. The first one here, guys, is activity ratio. Activity ratio, guys, is basically better for volume variance. अपने understanding के लिए, how do you compute volume variance? Absorbed overheads minus budgeted overheads. Absorbed overheads is based on actual output. Budgeted overheads is based on budgeted output. Yes or no? So to compute activity ratio, you write actual output divided by budgeted output, or you can also write standard hours for actual output divided by budgeted hours. How many hours or what is the amount of output that you have manufactured in relation to budgeted output? मैं पूरे ratios बाद में वापस पढ़ाऊंगा, guys, because this is exam में they will not give only standard costing, no, they can combine all the topics. Ratios are covered as a part of budgetary control. अभी के लिए the meaning of activity ratio is simple. What is the percentage volume that you have achieved as against the budgeted level? मतलब अगर budget के हिसाब से you have you were supposed to manufacture 10,000 units, but you've actually manufactured 9,500 units. Your activity beta is 95%. You have achieved 95% of the budgeted volume. Uska matlab hota hai activity ratio. Anything less than 100%, that means volume variance will be adverse. Anything more than 100%, that means volume variance would be favorable. What is the activity level that you have achieved as against the budgeted levels? Let's say that we budgeted to solve 10 questions as such beta, but then we have actually solved 11 questions. Activity ratio will be 110%. Are we clear about this? So it is actual output divided by budgeted output. That will be equal to standard hours for actual output divided by budgeted hours. सुन लो बाद में copy करो. How much will be standard hours for actual output beta here? Budgeted hours. This is equal to 99.54%. This is the activity. 5. 99.55% beta will be the activity ratio here. You should not write actual hours by budgeted hours, guys. Actual hours does not mean कि relation will be as per standards. इसीलिए actual output is always replaced with standard as for actual output. Are we clear? ये activity ratio को we divide into two parts. One is efficiency ratio, which you guys are experts in. We have done efficiency ratio yesterday also in one of the questions, guys. Or standard labor also. Standard hours for actual output divided by actual hours. 8,800 divided by 8,100. Our efficiency is 108.64%. And the other ratio is capacity ratio. Whether or not you have calendar, guys, capacity ratio will always be AH by BH only. Never AH by RBH. Even if there is calendar variance, for capacity ratio, we take AH by BH only. Apna actual hours beta are 8,100, budgeted hours are 8,840. These are the ratios. अभी के लिए बस ये लिख लेना, बाद में वापस पढ़ाऊंगा. फिर भी अब समझ में तो आ गया ना क्या कर रहे थे. Yes, guys. All right, kids. Once हो गया 35th वाला, efficiency भी करा, efficiency capacity कर लेना बेटा, practice के लिए कर ले. So as per the budget, guys, there are how many working days, guys, in question number 35? Mahanubhavalu, how many working days? Working days as per the budget beta 25. Actual working days? How many hours are you supposed to work for as per the budget? Per day, guys. Actual 6,300. Because you're working for more number of hours, but obvious, guys, your capacity variance also will be favorable. Calendar variance will be favorable because you're working for 2 extra days. Capacity variance also will be favorable because every day we are working for 300 hours more. Are we clear, guys? So what will be the total hours beta? 25 multiplied by 6,000. 1,50,000. Doubt है तो पूछो बेटा. वैसे शक्लें बना के मत देखो. Do you have a doubt in this? You and you. Both of you have a doubt. तुम्हारा नाम बोल रहे दोनों वापस. नाम. हाँ हाँ. 27 into 6,300 कितना है बेटा? 1,70,000. These are the number of days, number of hours, guys. Guys, यहाँ पे output per hour is given, guys, not number of hours per unit. Output per hour मतलब we are manufacturing 1 unit per hour. We should have manufactured as per the budget. Actually, we are manufacturing 0.9 units per hour. Efficiency adverse. Yes or no? So output, guys, as per the budget will be 1,50,000 units. Here it will be 1,70,100. Divide mat karna into 0.9. 1,53,090 units. And finally overheads, guys. As per the budget, fixed overheads were 1,50,000 rupees. Actual overheads are 1,56,000. This is the information that you need, guys. You can compute standard rate per hour or standard rate per unit, guys. Both of them will be 1 rupee per unit or 1 rupee per hour. After that, guys, you can compute all your variances. हो गया variances? Guys, stop talking. Standard rate per unit will be 1,50,000 rupees divided by 1,50,000 units. 1 rupee per unit. Standard rate per hour is also the same, guys. नहीं करने दे बात, नहीं सुनते वो लोग ऐसे. Standard hours for actual output, guys, will become, you have actually manufactured 1,53,090 units, guys, multiplied by 1 hour per unit, guys, and that will be equal to 1,53,090 hours. Now you can compute all the variances, guys. Capacity variance जब करोगे, guys, you will take actual hours as 1,70,100. Revised budgeted hours will be 1,62,000. यहाँ पे calendar है ना, so you have to compute revised budgeted hours. बाकी के पहले questions में calendar variance नहीं था बेटा, so that is why revised budgeted hours were the same as budgeted hours. यहाँ पे revised budgeted hours बेटा will be 6,000 hours for 27 days. That is 1,62,000 hours. These are all the given details, guys. You'll have to compute the variances. हो गया है? सिक्स किस में बेटा? कौन? ये अपने वाले में 35th वाले में. Yes, guys. First बेटा फिक्स्ड ओवरहेड क्या है बेटा? कौन सा कर रहे हो? कैलेंडर वेरिएंस. Fixed overhead calendar variance, guys, will be revised budgeted hours minus budgeted hours multiplied by standard rate per hour, guys. That will be 1,62,000 minus 1,50,000 multiplied by 1 rupee, guys. 12,000 favorable. Are we clear about this? Fixed overhead capacity variance, guys, will be equal to actual hours minus revised budgeted hours multiplied by standard rate per hour. Actual hours are 1,70,000 minus 1,62,000 multiplied by 1 rupee beta. This will be equal to 8,100 favorable. Fixed overhead efficiency variance, guys, will be adverse. It will be equal to standard hours for actual output minus actual hours multiplied by standard rate. Standard hours for actual output कितना था? 1,53,000 minus 1,70,100 into 1. 17,010 adverse. Total beta fixed overhead volume variance. Absorbed minus budgeted. बोलते हैं बस हो गया मेरे को भी. 30 favorable. Fixed overhead expenditure variance beta would be equal to 6,000 adverse. Budgeted minus actual. 6,000 adverse, guys. So this beta would be equal to. Please check, guys. The two ways of computing sales variances, guys, one is on the basis of selling price per unit, the other one is on the basis of margins per unit. Sales variances can either be computed on the basis of selling price per unit or on the basis of margins per unit, but obviously in real life we prefer computing it on the basis of margins per unit rather than computing it on the basis of selling price. It makes more this thing better. Obviously when you're reporting, you would want to know what is the amount of profits that are impacted. Now let's say guys, first, so this will be on the basis of sales, on the basis of selling price. Let's say guys that as per the budget you were supposed to sell an output of 5,000 units at a selling price of, let's say better, 20 rupees. The total sales as per the budget guys is how much? 1 lakh rupees. Let's say that the actual quantity sold guys was 4,500 units, but then you were able to sell that at a price of 21 rupees per unit. So your actual sales will be 94,500. Because we are dealing with an output element, we are no longer dealing with an input element as such better. To compute variances hereafter in sales variances, you're not going to write standard minus actual, you're going to write actual minus standard. If actuals are more, it is favorable. If actuals are less, it is adverse. You get a positive answer guys if you take actual minus standard rather than writing standard minus actual. So whenever we are dealing with outputs as such guys or items of revenues, actuals will come first. Just say efficiency variance guys, if based on time, what is the formula? Efficiency ratio efficiency ratio based on time beta, what is the formula? Standard hours for actual output divided by actual hours. It is not actual time, it is standard time divided by actual time. That's how you compute efficiency ratio based on time. Based on output, how do you compute efficiency ratio? Actual output by standard output. Output comes first. Alright. So whenever you're dealing with an output element guys, you write actuals minus standard rather than writing standard minus actual. Our overall sales variance guys is 5,500 adverse. So we write this as sales variance. In our example better, so this will be written as actual sales minus budgeted sales. Also guys, rather than using the word standard, we prefer using the word budget. It is something which is beyond the control of the organization guys usually. That is why we do not prefer using standard bhi kar sakte ho, but preferably the word to be used is, what's the formula for material cost variance, Kev? Standard price into standard quantity minus actual price into actual quantity. Exactly ulta likho abhi. Actual price into actual quantity or output minus budgeted quantity into budgeted price. This will become my overall sales variance. In our example beta, this will be how much? 21 multiplied by 4,500 minus 20 multiplied by 5,000. You will get 5,500 adverse. This sales variance is on account of two reasons. One is गाइस सिलेबस में नहीं है बेटा, बट काइंड टू बी बजटरी कंट्रोल का एक क्वेश्चन है जो आईसीआई स्टडी मटेरियल में अभी भी क्वेश्चन है. देयर इन दे विल आस्क अस टू प्रेजेंट अ रिकंसिलिएशन बिटवीन बजटेड प्रॉफिट एंड एक्चुअल प्रॉफिट बाय परफॉर्मिंग वेरिएंस एनालिसिस, एंड दैट वेरिएंस एनालिसिस में दे हैव इंक्लूडेड सेल्स वेरिएंस. वो गलती से आया है, क्यों आया है नहीं मालूम है, बट स्टैंडर्ड कॉस्टिंग चैप्टर में सेल्स वेरिएंसेस आर नॉट कवर्ड. वी स्टिल हैव टू डू इट बिकॉज देयर इज सम क्वेश्चन दैट इज कमिंग अप, एंड एनीवेज फाइनल के लिए काम में आएगा बेटा, अकल ही तो बढ़ रही है. This overall sales variance guys, if you look at it, is on account of two reasons. One is there was a change in sales volume. The other one beta is that there was a change in sales. Now on account of change in volume guys, is it adverse or is it favorable? You were supposed to sell 5,000 units, you actually sold 4,500 units. Favorable or adverse? 500 units adverse. On account of selling price guys, is it favorable or adverse? Favorable. All right. So to compute sales volume variance, you write actual quantity minus budgeted quantity multiplied by budgeted price. Exactly same as material usage variance but ulta. There we wrote standard quantity minus actual quantity multiplied by standard price. Here we are writing actual quantity minus budgeted quantity multiplied by budgeted price. In our example, it is 4,500 units minus 5,000 units multiplied by 10,000 adverse. How do you compute material price variance? Standard price minus. Here guys, we are going to write actual price minus 21 minus 20 multiplied by an actual quantity of 4,500. Put together, it will become 5,500 adverse. समझ में आ रहा है? Your sales volume variance will be further segregated into sales sub-volume variance and the sales mix variance. Sub-volume variance is also known as sales quantity variance. This obviously will arise when a company deals with more than one product. If a company is selling more than one product, total change in sales will not only be on account of change in selling price, but it can also be on account of change in the proportion in which you are selling the products. Yes or no? If you change the proportion as such, better margins will increase. Isliye whenever you evaluate the fundamentals of any company, guys, you always see what is the proportion of sales coming in from their regular products, what is the proportion of sales coming in from their premium products. Higher the proportion of sales that comes from premium products as such, better higher will be the margins. And if the margins improve, obviously profitabilities increase. समझ में आ रहा है नहीं आ रहा है? So sales volume variance will be further segregated into sales quantity variance and sales mix variance. To do this, you introduce a new term called as RBQ, revised budgeted quantity. What's the formula for sales sub-usage variance? Standard quantity minus revised standard quantity. Yes or no, guys? Into standard price. Now you will write RBQ minus BQ multiplied by budgeted price. What's the formula for sales mix variance, guys? Now you will write actual quantity minus revised budgeted quantity multiplied by budgeted price. Are we clear? This is how you compute your sales quantity variance into sales quantity and sales mix variance. ये quantity mix याद रखने की जरूरत भी नहीं है अपने लिए. Just remember these main variance. That is overall sales variance is segregated into sales volume variance and sales quantity variance is further segregated into market size variance and market share variance. Why did your sales change? Did the overall industry increase? If yes, that is market size variance. Or were you able to target a better share? Overall industry did not increase, but we tried to increase our position in the market as such, but that is market share variance. You're not going to cover this, I'm just telling you that. This further segregation of quantity variance into market size and market share variance. शायद final में भी नहीं पढ़ोगे तुम लोग ये है बस. Real life में we do compute market size and market share variance, which is very important. ये सब terms ना बेटा, they're not just important for costing, they're more important for evaluating the performance of a company. Any decline in share as such, guys, of the company in the overall industry as such, better will obviously be detrimental to the profits of the company. ठीक है? So are we all clear about this? Any doubt in this, guys? Very simple. Or how will you remember sales variances? Remember material variances, ulta likho. That's it. And why are we writing the other way around? We are dealing with output, revenue. Revenue में बेटा अगर ज़्यादा है तो it is better. It is favorable. Cost में ज़्यादा है तो it is not better, it is adverse. That is why we write actual minus standards rather than writing standards minus actuals. Any doubt in this? These sales variances can also be computed on the basis of margins. ठीक है? Your overall sales margin variance is still the same, guys. जैसे वहाँ पे used to write actual price into actual quantity. Here I'll write actual margin into actual quantity minus budgeted margin into budgeted quantity. प्राइस को हटाओ, मार्जिन लेके आओ. Your overall margin variance will still be segregated into sales margin, volume variance and sales margin. हर एक वर्ड के आगे मार्जिन वर्ड ऐड कर दो बेटा, मार्जिन वेरिएंस हो गया. P हटा के M लिखो. What's the formula for sales volume variance? What's the formula for material usage variance? Standard quantity minus, I strike this and I wrote actual quantity minus budgeted quantity into budgeted price. I'm striking this also now. I'm writing actual quantity minus budgeted quantity into, simple. Replace the word price with margin. Sales margin price variance. What's the formula for material price variance? What do you think will be the formula for sales price variance? What do you think will be the formula for sales margin price variance? क्या बात है guys? रुलाओगे यार. All right. Now better. Let's say guys, kid Reet, as per the budget you were supposed to sell. देख लिया रीत को? अच्छा लग रहा है? अब यहाँ पे ध्यान देंगे. As per the budget, beta, let's say that the price at which the product was supposed to be sold is 25. The cost of the product as per the budget is 18 rupees. Actual guys is, let's say, 24 rupees. Actual cost per unit beta is 19 rupees. What will be the amount of budgeted margin, Reet, and actual margin? Budgeted margin beta would be 7 and actual margin would be 5. Do you really think I'll ask a question guys if this was like this? मतलब तुम्हारा लेवल देखो यार, तुम्हारे को ऐसे लग रहा है क्या तुम्हारे को ऐसे फालतू क्वेश्चन पूछूंगा मैं? इसीलिए तो ना. Why will you think better that the answer is simply going to be 25 minus 18, 24 minus 19? You should compute both of them with 18. Why? So तो 19 भी तो कॉस्ट ही है ना अपना. तो ऐसा क्यों? सोचा है. पिछले वाले क्वेश्चन में अभी तक मैं मार्जिन पढ़ा ही नहीं बेटा. पिछले वाले क्वेश्चन में एक्चुअल सेलिंग प्राइस बजट सेलिंग प्राइस सेम था. I don't know guys. Yes beta, what do you think is budget margin? What do you think is actual margin? 7 and incorrect guys. Budgeted margin is 7 rupees. Actual margin is 6 rupees. Now pay attention guys. मैं कोई psychiatrist नहीं हूँ बेटा, ठीक है? But pay attention. The difference between 19 rupees and 18 rupees as such guys is already explained under cost variances. Material cost variance, labor cost variance, overhead cost variance will tell us the reason for the difference between 18 and 19 rupees. I cannot include the same variance twice. If I deduct actual cost here, I am not only including that extra 1 rupee in my cost variances, I'm also deducting that 1 rupee from my sales variances. Are you not incorporating the difference of 1 rupee twice? Plus, sales department is not responsible for difference in actual cost and budgeted cost. When you compute sales variances, you're evaluating the performance of sales department. Let's say guys that you have asked the sales department to sell a product at 25 rupees. The department sells a product at 28. Manufacturing department was supposed to manufacture the product at 15 rupees as such better. They manufactured it at 22. Random example. As per you, actual margin is 10 rupees, budgeted margin is 6 rupees. You call the sales manager, okay, and you tell him you were supposed to make 10 rupees profit. You made a profit of only 6 rupees. He will slap you back and go, says, you asked me to sell the product at 25. I sold the product at. If you have to ask someone, call the production manager. Okay. Are you getting the point, guys? For computation of sales variances, actual cost per unit is irrelevant. You should only and only take standard cost per unit. वो इतना सब नहीं आना चाहिए बेटा, बस समझा रहा हूँ, समझ में आ रहा है? The reason is very simple. Two reasons. First reason, already incorporated. Where incorporated? Cost variances, guys. Under cost variances, you're already incorporating the difference between standard cost and actual cost. So you cannot again include that actual cost here. Second reason, sales department is not responsible. Standard costing is used for performance evaluation, responsibility accounting as such. Guys, you should know whom are you questioning what. The sales department will not be responsible for difference between standard cost and actual cost. Are we all clear about this? So just remember one small point. वो क्या करते बेटा purposely अभी नहीं आएगा CA final में you'll see a lot of questions on sales variances, but that is also MCQ paper only. अभी self-paced learning module. So they purposely give a table: budgeted sales, budgeted cost, actual sales, actual cost. ताकि अपन जोश में आगे actual sales minus actual cost is equal to actual margin लिखना, और one of the options will match with that. फुल खुश हो गए बाहर आते, क्या करा मालूम है, पहले ही चांस में ऑप्शन मैच हो गया बोल के, वो बोलता है वापस आ बोल के. Yes guys, are we all clear about this? Now, if an organization follows absorption costing, this cost per unit will be total cost per unit including fixed manufacturing overheads. If an organization follows marginal costing, this cost per unit should only be standard variable cost. It should not include fixed cost. Normal. If an organization follows absorption costing, cost per unit should be total cost per unit, that includes your variable manufacturing cost and fixed manufacturing cost, guys. And if an organization follows marginal costing, it should only and only include variable cost per unit. समझ में आ रहा है नहीं आ रहा है? If an organization follows marginal costing, but there's another place 9.5. There's another place as such, guys, where the variances will change. Abhishek, ठीक है बेटा? If an organization follows marginal costing, there's one more place where variances change. Fixed overhead variances. Material variances, labor variances, variable overhead variances will not change whether an organization follows better marginal costing or absorption costing. Fixed overhead variances will change if an organization follows marginal costing. Abhishek, tu bol beta, how do you think variances can change? अब जरा सीए वाला आंसर दे दो बेटा. हम क्वेश्चन क्या पूछे, अब आंसर क्या दे रहे हो? चेंज इन आउटपुट एंड चेंज इन प्राइस, सेल्स वेरिएंसेस. टू रीजंस. फिक्स्ड ओवरहेड में चेंज इन प्राइस करे ही नहीं कभी. चेंज इन एक्सपेंडिचर बोल रहा क्या तू? आप समझ लो सर जो समझना है. यस गाइस, एनीवन गाइस? अब्सॉर्ब्ड ओवरहेड्स नहीं रहते. सो जरा बोलो सर आगे कैसा चेंज होता? उतना नहीं समझा. हमारा ग्रॉक इज नॉट एबल टू आंसर गाइस. ग्रॉक ही है ना वो. यस गाइस, our AI tool says he is not updated with enough information to answer this query. You answer guys. This on-site machine learning going on. Next time you ask or input a query based on this bot will answer. Yes guys. Guys, you've answered this before. I wouldn't have asked you this. Someone answered it before. His name was this. No volume variance, only expenditure variance will arise. If an organization follows marginal costing, guys, there's going to be no fixed overhead volume variance because there's no absorption of fixed overheads. You will only and only have fixed overheads expenditure variance. It is a period cost, beta. You directly transfer fixed overheads to P&L account. It is not included in the valuation of inventory. When it is, I thought you will answer, beta. When there's no absorbed overheads, the question of computing volume variance does not arise. Volume variance arises only because a change in volume is affecting the total amount to be absorbed. Yes or no, guys? So if an organization follows marginal cost, never tested, guys. They can definitely test this in the examination. They have the right to do so. जैसे याद है, I told you labor variances if paid on the basis of number of pieces. क्या नहीं आएगा? Efficiency नहीं आएगा. Only rate variance will arise. Likewise, if an organization follows fixed overheads, you are not absorbing fixed overheads. Irrespective of the output as such, beta, you will dump the total budgeted fixed overheads. So there can still be a variance, but that variance will only be on account of change in expenditure, not change in volume. Are we clear about this? Yes or no? समझ में आया नहीं आया बेटा? मतलब एक बार CA फाइनल में they ask question like this only guys. Compute profitability statement under absorption costing, under marginal costing, under absorption with standard costing, under absorption with marginal costing. Reconcile all the profits. Dead easy if you know the relations. If you know what should come under what. Very simple to answer. But if you do not know that as such better, there's no way that they also divide standards guys into two standards called as physical standards and price standards. फिजिकल स्टैंडर्ड्स मतलब क्वांटिटी डिटर्मिनेशन, जैसे स्टैंडर्ड क्वांटिटी कंप्यूट कर रहे हो या फिर लेबर टाइम कंप्यूट कर रहे हो, दैट्स अ फिजिकल स्टैंडर्ड. प्राइस स्टैंडर्ड्स बेटा इज expenditure, the amount that you're spending on the resource, but they just divide those into physical and this. We do not have the interdependence of variance or the interrelation of variances guys. मतलब there's a possibility that price variance guys can be favorable if usage variance is adverse because of buying cheaper quality of raw material. Possible or not? There's a possibility guys that labor efficiency variance can be adverse on account of a favorable price variance. You're buying a cheaper quality of raw material, that is why labor is taking more amount of time as such better to manufacture the materials. There's a possibility that on account of unskilled labor efficiency is low, that is resulting in an adverse efficiency variance but a favorable price rate variance. An adverse efficiency variance can result in, a favorable efficiency variance can result in an adverse rate variance. You are hiring better skilled labor as such guys, but that is resulting in an adverse rate variance. ऐसे multiple factors है बेटा. Final में we also have planning variances and operating variances on account of controllable factors, on account of uncontrollable factors, wherein we revise the standards during the year. The difference between original standard and revised standard as such guys is uncontrollable part. The difference between revised standard and the actuals will become the controllable part. Better reporting. सोचो तुम लोग ओरिजिनली 10 रुपीज पर केजी रॉ मटेरियल स्टैंडर्ड फिक्स किए, बट यू नो दैट मार्केट कंडीशंस चेंज एंड इट इज नॉट पॉसिबल एट ऑल टू बाय रॉ मटेरियल एट 10 rupees. Let's say the new standard is 12 rupees. So the difference between 10 and 12 should be classified as uncontrollable. Compute that variance separately. 12 rupees will be compared with actuals to compute the remaining portion of controllable. Becomes easier when you report to the top management. Results in better decision making rather than computing directly 10 rupees का difference and actual. ये सब बाद में बेटा. स्टैंडर्ड कॉस्टिंग इज नॉट एंडिंग हियर, मतलब ऐसा नहीं है कि सिर्फ यही है. देयर आर वे टू मेनी थिंग्स दैट यू विल लर्न.